Good morning, friends. Nalnakshi Swami here. Welcome to my channel, Smart Index Edge. Here, today I am coming up with basic requirements for the option holding for 3 days. What all you need to do. So, this is actually you might have seen. You might have seen current rally in Nifty index as well as in Bank Nifty. Almost 500 points rally in Nifty. So you feel left out. You have missed the trend actually. So as an option buyer, you can make more money if you hold the options. But the fear will be there. It will be decaying it. And because of the fear, we usually retail traders try to enter around, they take the tips and they try to enter randomly without any basic analysis. They try to enter into the market like somebody tells you buy around this and sell around this. Only for 20 points they make profit. So if you can make solid 100 to 200 points within a week's time, if you identify the trend, primary trend, and if you hold the position, you can be profitable. Instead of trading day to day, one can make money by holding the options too, buying the options too, not only selling the option. So if the market is in trend, if it is showing some sort of reversal, then it is very, very helpful for a retailer trader to make money. So one trade in a month will be suffice to make profit for himself instead of rather than trading for day to day intraday trading. So for that, I've come up with some idea. I had an idea, just a basic thing. Basic thing, if you do that, you will be profitable. What is the basic requirement is, first you have to identify the trend on the major trend on the daily chart. You have to go to the daily chart. I'm going to explain it to it and later I'll show it on the chart. First basic requirement is identifying the trend that is on the daily chart and find the support, and you have to identify the primary trend also. If the trend is positive to the upside, you have to see for the primary trend. You know that basic thing, you know that market doesn't go straight away up. The trend in between the trend, primary trend will be negative. So if you identify the primary trend to be negative on the daily chart, wait for the reversal. And also find the support and resistance level on the chart. You have to mark the support and resistance levels. I'm going to show that. And later, after identifying the support and resistance, so you are anticipating when the trend is positive, major trend is positive, you are anticipating primary trend to reverse, right? It cannot go on falling. So if the primary trend will reverse, for that identification, you need candlestick formation. So identify the bearish candle as well as the reversal candlestick pattern. And then next step is mark the bearish and reversal candle with the vertical line. Because why I need this, I'm telling you. You have to mark it. You have to mark it. I will show it on the chart while explaining it to you how you can do that. These are the basic requirements for the thing, how you can hold. Next step is time for action. What you have to do? You mark the bearish candle and reversal candle on the daily time frame with vertical line and shift to smaller time frame for decision. You have to make decision. So you have got a reversal bearish candle on the first day. On the second day, you are seeing a reversal candlestick pattern, and I am shifting the time frame to smaller time frame like an hourly or 15 minutes for my decision making. Then I need confirmation. Without the confirmation, I'm not going to enter. Just a reversal candle is just a signal. You need confirmation for that. So what I'm doing is marking the zone, that zone using the rectangle tool. I'm marking that zone with a rectangle tool. On the third day, if the price opens above the zone, then it is a confirmation for you. So it is a time for your action. You can, and also you have to analyze for if you are an option buyer, if it is on the buy side, you have to have the basic knowledge of options also. That also I am explaining it to you with taking the historical price of the option, this one chart from the Nifty and NSE website, NSE website, and I am going to explain it to you. So it provides confirmation to hold the position for 3 days. Continuously, you can hold the position for 3 days for the basic gain. For in this bull run in Nifty, so you got all my points. I'm going to delete it because I have to go for the chart. I'll remove this, and I'll show it to you. Okay. What did I say? Let me reset the chart. First step is identify the major trend. So major trend is what? In Nifty index is major trend is up, right? This is the major trend. Primary trend is down. I'm saying 2 days of candlestick. And I'm also using 20 period moving average for my support, visual support. See, on the third day, Nifty was falling. Though the major trend was up, it started correcting. It is the market nature. It gives discount always. Discount is an opportunity. If the trend is up, this is the primary trend. So this on the major trend, I'm going to mark the support zone. This is the support zone. Why I'm saying I'm taking this candle as a support? Because from here the price has moved up, right? This is the support. So primary trend is down. I'm watching. I'm seeing a reversal candle near the support. So next step is I'm marking vertical line on the bearish candle and also a reversal candle. So it is signifying reversal dose is signifying, it is signaling that so some sort of buyers and sellers, there is a tug of war between the buyers and sellers, and something is happening, cooking over here because of this support zone, significant support zone. And major trend is up. Secondary trend is about to finish its game, so it is signaling something. Then I shift my time frame. I've marked the vertical lines on the bearish candle as well as the reversal candle. Next, I'm shifting my time frame. Either you can go to hourly. I'm going to hourly and I am showing it to you. This is the hourly time. Okay. Then I mark a zone OT. Hourly, let me go to 15 minutes. So this is on 27th. 26th, it's completion. See, if I mark there will be some sort of aberration. Okay. So on 23rd, it was falling, and 26th also. So you have seen dozy candlestick formation on the 26th, right? You have marked the rectangle. So, okay. This is the closing price, right? Closing price. What happened the next day after the reversal, bearish candle and dozy candle, it reversed, right? You can see bullishness in this price action. Though it is a bullish, opening was bullish, gap up and it retraced. It is giving a discount. Where it is giving discount, the discount is not exceeding below this zone, below the closing price of this. So another step what you can do is take a fib tool, and this is the trough. In my previous video, I've explained to identify the trend previous day itself. This is the support and this is the peak. So if I take the peak, if I take the fib tool and apply from support to the resistance, that is the resistance formed on the next day, the confirmation day, the retracement. Market usually makes an high, opens at some place. It has opened here, opened around 18,740 and went up to 759, confusing the traders that it is going to come down. But here already I've seen the reversal signal, and if I take the fib tool from this support area to the peak on the next day morning around 9:50, the retracement, that is the magic of the retracement. I have talked about it in my previous video. In this retracement has not exceeded beyond the 50%. That is in between 0.38 and 0.50%. So this retracement did not exceed beyond, even after, this is the time, note down, 1 hour. After 1 hour, it started showing some sort of trend reversal. Trend reversal you can see by seeing the picture, right? So, okay. Sorry. Here you can see some sort of structure. It was a falling structure, it was a reversal and retest. So this is the confirmation of the price. First confirmation, gapped up. Second confirmation, it did not fall below 50% retracement of the trend established from the previous day to today's peak. And third confirmation, retest making a higher low, confirming this high, and price started moving. So you can take a position on the third day by seeing all these things, okay? By seeing the price action. This is how you can hold the position. Suppose when you have taken the position, option, for example, if it is, the price was around 18,650, you could have gone for 18,700 call, because it was a reversal from the primary trend reversal. Then you could have taken for a 18. You should not go for by seeing put option. Many traders, they do that. Intraday, by seeing this rejection, they go for short trade, they go for put option trade. That is not advisable. See, from here to 18,759 to 40 points decline. 40 points decline, how much gain you can see on the option premium is hardly 30 points. So you will be making wrong decision if it starts. If you are thinking and holding the position, it will go down because you have not made the preparation for your day trade. You have not made the preparation for anything at all. You just rely upon the tips, or somebody tells, some YouTubers come and tell you. They don't explain you the whole thing. I'm trying to explain you very clearly what you can do, how you can hold the position. So when you have held the position, when you have entered at the position option at a very discount level, maximum 110 to 122, that day it had come, and if you are holding the position, it had closed around on that day 315 rupees. That same option closed around 315. So still, it cannot drastically fall, because when it has raised from 110 to 135, that is more than 100 points. So if the price has to drop 100 points on the option premium, the Nifty has to fall around to minimum 100 to 150 points on the index. So that will not happen. So that is another confirmation. You can hold with the without any thinking. Okay, without any dilemma, you can hold it. See, this option continued upwards. See, here it went up. Finally, yesterday, if you see the price over here, it has closed around 500 rupees. 500 rupees. So if you analyze the pattern, first thing, identify the trend on the daily time frame, and primary, if the primary trend is secondary trend is corrective mode, then you can wait for the reversal candlestick formation, and then if you follow this procedure, you can hold the option, because it is a super trend. It will not come like this, not always. This type of trend formation, you will not get this. Once in 3 months, you can get this type of movement. So you would have made 500 rupees if you would have purchased, say, for example, around 120 or something. So you would have made nearly 220, 320, 420. So 300 rupees solid per lot. If you would have converted for per lot, 300, just for an example, I'm showing 330 into 50, you could have made 16,500 in 3 days. Within a week, you could have made 16,500 rupees. For the investment, how much you would have paid? Let me clear it. 120 into 50, you have paid only 6,000 rupees. That is almost 3 times the money what you have invested. But how it can be done? By careful observation, careful deciding everything. So if you do methodical analysis, you can also make money in the option. This is the way, this is the trick. I have explained it to you. I hope you can adopt this procedure and try to make profit in the market. Thank you very much, friends. Nalinakshi Swami signing off.